Preparing for a financial analyst at Adidas interview, you've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the 3 financial statements and how they connect. The income statement measures profitability, the balance sheet shows financial position, and the cash flow statement explains changes in cash. Net income flows into retained earnings and starts operating cash flow. Depreciation lowers accounting profit but is added back in cash flow, while inventory purchases reduce cash and increase assets. At Adidas, a strong sales quarter could still weaken cash flow if inventory builds or receivables rise, so I would analyze all 3 statements together rather than relying on earnings alone. While answering, focus on the income statement, balance sheet, and cash flow statement. Explain net income, retained earnings, working capital, depreciation, and why a change in one statement affects the others. Question 2. How would you assess Adidas's financial performance? I would begin with reported and currency-neutral revenue growth, then separate performance by market, product category, and channel. Next, I would examine gross margin, operating expenses, operating profit, inventory, and operating cash flow. For Adidas, wholesale, direct-to-consumer, lifestyle, and performance trends can tell different stories. I would compare actual results with budget, prior year, guidance, and competitors, then identify whether performance reflects volume, pricing, mix, currency, or temporary costs. Make sure to cover revenue growth, gross and operating margins, regional and channel mix, inventory, cash conversion, guidance versus actual results, and comparisons with prior periods and relevant sportswear competitors. Question 3. What is the difference between reported currency and currency-neutral growth? Reported growth includes the effect of translating local currency results into euros, while currency-neutral growth removes that translation impact. I would use currency-neutral growth to judge underlying demand and reported growth to understand what shareholders actually see in consolidated revenue. For example, strong U.S. sales may translate into weaker euro growth if the dollar depreciates. I would never treat the 2 measures as interchangeable, each answers a different management question. In your answer, talk about exchange rate translation, constant currency analysis, why Adidas emphasizes currency-neutral growth, and the distinction between operational performance and reported euro-denominated results. Question 4. How would you build a revenue forecast for Adidas? I would forecast revenue by region, channel, and product category rather than applying one company-wide growth rate. For each segment, I would estimate units, average selling price, launch timing, promotional activity, and seasonality. I would separately model wholesale orders and DTC traffic, conversion, and basket size. Then I would apply currency assumptions and build base, upside, and downside cases, linking each case to inventory availability, consumer demand, and planned product launches. Be sure to mention regional revenue drivers, product categories, wholesale and DTC channels, units, price, seasonality, launches, currency assumptions, and scenario analysis around demand and inventory availability. Question 5. Which KPIs would you monitor in an Adidas financial analyst role? My core dashboard would include currency-neutral revenue, gross margin, operating margin, inventory days, operating cash flow, and free cash flow. Commercially, I would track sell-through, full price versus promotional sales, average selling price, DTC share, e-commerce conversion, and wholesale order intake. I would cut these metrics by geography, channel, and category. At Adidas, this combination helps distinguish healthy demand from revenue created through discounting or excess inventory. Focus on currency-neutral sales, gross margin, operating margin, sell-through, inventory, DTC share, e-commerce conversion, average selling price, working capital, cash flow, and regional performance versus plan. Question 6. Explain gross margin and the factors that could change Adidas's gross margin. Gross margin equals revenue minus cost of sales divided by revenue. At Adidas, it can improve through higher pricing, premium product mix, full price sell-through, sourcing efficiencies, or favorable currency. It can decline because of markdowns, freight inflation, material costs, unfavorable channel mix, inventory provisions, or foreign exchange movements. I would bridge the change into price, volume, mix, cost, currency, and one-off items, then test whether the movement is sustainable. Cover selling price, product cost, freight, sourcing, foreign exchange, channel mix, geographic mix, markdowns, inventory provisions, and how premium launches or promotions influence reported margin. Question 7. How would you analyze Adidas's inventory position? I would compare inventory growth with sales growth, calculate turnover and days inventory outstanding, and review aging by product, region, and channel. I would also examine sell-through, purchase commitments, seasonal timing, and inventory provisions. Inventory that supports an important launch may be appropriate, while aged products likely require markdowns and could pressure gross margin. I would forecast liquidation scenarios and assess whether replenishment plans match actual demand. Make sure to cover inventory turnover, days inventory outstanding, aging, sell-through, product lifecycle, provisions, purchase commitments, seasonality, and the trade-off between availability and markdown risk. Question 8. What is working capital and why does it matter for Adidas? Working capital measures the cash tied up in operating assets and liabilities, especially receivables, inventory, and payables. Adidas can generate accounting profit but consume cash if inventory rises ahead of demand or wholesale customers pay slowly. I would monitor DSO, inventory days, DPO, and the cash conversion cycle by region and channel. I would also consider seasonal buying patterns, supplier relationships, and whether cash improvement comes from sustainable process changes. Discuss receivables, inventory, payables, cash conversion cycle, seasonal purchasing, wholesale collections, supplier terms, and how working capital decisions affect liquidity and free cash flow. Question 9. How would you explain a variance between actual and budgeted operating profit? I would create a bridge from budget to actual, separating revenue variance from gross margin and operating expense variance. Revenue would be decomposed into volume, price, mix, channel, geography, and currency. Then I would identify cost inflation, marketing timing, logistics, restructuring, and one-time items. For Adidas, I would determine whether a shortfall reflects weak demand or planned investment. Finally, I would update the forecast and recommend actions, not merely describe the variance. In your answer, describe a structured bridge using revenue, volume, price, mix, gross margin, operating expenses, foreign exchange, timing, and one-off items, followed by corrective actions. Question 10. How would you evaluate the profitability of Adidas's DTC channel versus wholesale? I would compare each channel on revenue, gross margin, fulfillment, store or platform costs, marketing, returns, and working capital. DTC often offers better pricing and customer data, but it carries higher operating and fulfillment expenses. Wholesale may have lower gross margin but broader reach and simpler execution. I would calculate contribution profit and cash economics by channel, then consider strategic benefits such as brand control, customer ownership, and inventory flexibility. Cover revenue quality, gross margin, fulfillment and store costs, digital investment, returns, customer acquisition, working capital, strategic control, and contribution profit rather than gross margin alone. Question 11. How do foreign exchange movements affect Adidas's financial results? Foreign exchange affects Adidas through transaction exposure on purchases and sales, and translation exposure when local subsidiaries are consolidated into euros. A weaker euro can increase reported revenue from foreign markets, while currency movements can also raise product costs and compress margins. I would review hedging policies, forecast rates, and natural offsets between revenues and expenses. Currency-neutral growth isolates operations, but actual cash flows and reported earnings still reflect exchange rates. Be sure to mention transaction and translation exposure, local currency sales, euro reporting, hedging, product costs, margin effects, and why currency-neutral growth does not eliminate cash or earnings risk. Question 12. What is free cash flow and how would you forecast it? Free cash flow is generally operating cash flow less capital expenditure. I would forecast it from operating profit, taxes, depreciation, provisions, working capital movements, restructuring cash costs, and CapEx. For Adidas, inventory and receivables can create significant seasonal swings, while stores, technology, and logistics require investment. I would reconcile free cash flow to net income and investigate gaps, because strong earnings with weak cash conversion may signal inventory buildup or other execution issues. Discuss operating cash flow, capital expenditure, taxes, working capital, lease considerations, restructuring, seasonality, and the importance of reconciling free cash flow to earnings quality. Question 13. how would you assess the financial impact of a new Adidas product launch? I would build a launch profit and loss using expected units, price, product cost, launch marketing, distribution costs, and timing. I would estimate incremental demand separately from sales that might cannibalize existing products. Inventory commitments and downside markdown risk are equally important. I would model upside base and downside sell-through cases, then track actual conversion, full-price sales, returns, and repeat demand. The investment is attractive only if incremental contribution justifies the risk. Focus on forecast units, pricing, gross margin, marketing, cannibalization, inventory requirements, launch timing, sell-through assumptions, scenario analysis, and post-launch performance monitoring. Question 14. How would you analyze a scenario where Adidas revenue grows but operating profit declines? I would first determine whether the decline comes from gross margin or operating expenses. Revenue growth may be low quality if it relies on promotions, lower margin channels, unfavorable category mix, or excess inventory clearance. I would also test marketing investments, freight, wages, foreign exchange, and restructuring costs. Then I would separate temporary headwinds from structural issues and assess whether future revenue growth can convert into profit through better pricing, mix, and cost discipline. Mention gross margin compression, discounting, unfavorable product or channel mix, marketing investment, wage and freight inflation, foreign exchange, restructuring, and whether the pressure is temporary or structural. Question 15. What accounting issues would you consider when analyzing Adidas under International Financial Reporting Standards? I would pay attention to International Financial Reporting Standards 15 Revenue Recognition, International Financial Reporting Standards 16 Lease Accounting, Inventory measured at the lower of cost and net realizable value, impairment testing, provisions, and foreign currency translation. Lease accounting can increase reported assets, liabilities, and EBITDA while changing expense presentation. I would distinguish accounting effects from cash economics and read significant judgments and estimates carefully. That discipline matters when comparing Adidas across periods or against competitors using different presentations. Cover revenue recognition, leases under International Financial Reporting Standards 16, inventory valuation, impairment, provisions, foreign currency, capitalization policies, and the difference between accounting presentation and underlying operating economics. Question 16. How would you use Excel to investigate a financial problem at Adidas? I would begin by defining the question and validating source data before building a clean, modular workbook. I would use pivot tables, SUMIFs, XLOOKUP, logical formulas, and variance bridges to analyze performance by region, channel, and category. I would include visible assumptions, scenario switches, reconciliation checks, and documentation. For example, an inventory issue should connect sales, aging, sell-through, provisions, and cash impact, not remain an isolated spreadsheet calculation. Mention data validation, structured workbooks, pivot tables, lookup formulas, variance bridges, scenario controls, error checks, documentation, and translating analysis into a clear management recommendation. Question 17. Tell me about a time you found an error in financial analysis. In one reporting file, I noticed that a regional total did not reconcile to the consolidated figure. I traced the issue to a duplicated product category mapping created during a data refresh, quantified the impact, and informed my manager immediately. I corrected the file, reran the variance analysis, and added a duplicate key check plus a reconciliation tab. The experience reinforced that speed matters, but controlled validation and transparent communication protect decision quality. Be sure to describe the context, checking process, root cause, quantified impact, communication, correction, and control improvement without blaming another person or overstating your role. Question 18. How would you prioritize competing requests from Adidas's finance and commercial teams? I would rank requests by deadline, financial materiality, decision impact, and dependencies. A forecast input needed for executive guidance would generally take priority over a lower impact presentation refinement. I would clarify the required output, agree timing with stakeholders, and communicate trade-offs early. If time were limited, I would deliver a reliable first version with clearly labeled assumptions, then improve it. I would never sacrifice control checks on high-stakes reporting. Discuss materiality, deadlines, decision impact, dependencies, stakeholder alignment, transparent trade-offs, early escalation, and maintaining quality while delivering a practical first version when necessary. Question 19. Why do you want to work as a financial analyst at Adidas? Adidas combines a globally recognized brand with complex financial questions across products, regions, channels, and currencies. I am attracted to the opportunity to connect detailed analysis with decisions about inventory, pricing, launches, and profitable growth. The shift towards stronger direct consumer relationships also creates valuable data and planning challenges. I would bring disciplined modeling, curiosity, and clear communication, while learning how finance supports both brand strength and sustainable cash generation. Connect your analytical skills to Adidas's global consumer business, brand and product economics, regional complexity, DTC transformation, sustainability priorities, and interest in turning data into commercial decisions. Question 20. If Adidas asked you to recommend an action after a weak quarter, how would you approach it? I would avoid recommending immediate cuts before diagnosing the issue. I would analyze sales by market, category, channel, and product, then review pricing, inventory aging, margin, cash flow, and forecast accuracy. I would compare actions such as targeted markdowns, lower future orders, marketing changes, or expense timing, quantifying profit and cash effects. My recommendation would balance near-term recovery with brand protection and include owners' milestones and KPIs for follow-up. Focus on diagnosing root causes first, separating demand from execution, analyzing inventory and cash, testing alternatives, quantifying trade-offs, considering brand impact, and presenting a recommendation with measurable follow-up actions. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.